bullish on Bitcoin, the Fed starts printing nonstop again. At least for Bitcoin, any sort of printing of money, the reason for Bitcoin stands out even more. If you look at today, Bitcoin's down and we see the stock market down, right? So we see that correlation still holding. But then if you look at the bigger time frame, Bitcoin's been grinding up while the stock market's been a little bit more fearful and panicky. So I think there's this in-between period. Initially, Bitcoin was 100% a risk asset. Slowly over time, and this will take years, Bitcoin will slowly move into more of a safety play versus kind of or with a digital gold or with gold.
In the recent interview with David Lynn, Gareth Soloway, chief market strategist of InTheMoneyStocks.com, doubles down on the market crash and Bitcoin's recent movements. It's been quite a bearish week for Bitcoin, as the crypto has fallen around 3% since the beginning of the week. Price action, in particular, has had Bitcoin struggling to break above $27,000, indicating a potential risk of more losses below this resistance level in the near term. However, according to a crypto analyst, this current retracement might be the beginning of a historical Bitcoin cycle before each halving. Soloway mentioned that halving events boost Bitcoin's price in the long term. However, there are doubts about whether this boost can overcome short-term fear and greed. The Federal Reserve has been targeting the cryptocurrency industry for quite some time. As inflation levels continue to surge in the United States, analysts are speculating whether the Federal Reserve will turn to printing more money. Doing so could help boost Bitcoin's price back up to its former height. Currently, Bitcoin appears to have largely decoupled from traditional equities, as evidenced by its price trajectory no longer mirroring that of major indices such as the S&P 500. The correlation between Bitcoin and the S&P 500 reached its zenith on August 25th, with a value of 0.8. Since then, the correlation has been on a decline, with Bitcoin exhibiting slower upward movement compared to equities and more pronounced downturns throughout September. Currently, the correlation value stands at -0.5, indicating that the two are moving in opposite directions. In the interview, Soloway mentioned that if the Fed prints a lot of money, it could be bad for the economy and regular investments like stocks. However, it might make Bitcoin even more appealing as a long-term store of value and a hedge against economic problems. Now, let's shift our focus to a few clips from the interview.
Bitcoin is slowly becoming kind of the inverse market, where when stocks get a little bit scary, people do start to inch over a little bit towards the cryptocurrency side of Bitcoin. Everyone's assuming the BlackRock ETF and the ETF, the spot ETFs, will get approved, which eventually I do agree with. So I think that this is where it's kind of this in-between period where it's kind of a digital gold, but it's kind of still a risk asset. And I say kind of still a risk asset because if you look at today, Bitcoin's down and we see the stock market down, right? So we see that correlation still holding. But then if you look at the bigger time frame, Bitcoin's been grinding up while the stock market's been a little bit more fearful and panicky. So I think there's this in-between period. Initially, Bitcoin was 100% a risk asset. Slowly over time, and this will take years, Bitcoin will slowly move into more of a safety play versus kind of or with a digital gold or with gold. And I think we're seeing that in real time happening. It just takes a really long time. So again, I'm still in the camp that we could still see a big dump out on Bitcoins going forward. I'm worried that there's a head and shoulders pattern starting to develop here. We'll have to watch that very carefully over the next month or so. But if we break this 25,000 low here, we're going to go to 20. If 20 breaks, we're testing the lows on Bitcoin again. And I do worry that if panic really hits the market, selling becomes indiscriminate. And that's where you could see Bitcoin dump out. By the way, long-term, huge advocate of Bitcoin. I love it. I just do think that going through this next tumultuous period in the financial system could be very troublesome early on for Bitcoin. Longer term, so having these events are fundamental. Fundamentals mean things over the long term. So long term, the less supply, the better. We know that. The reason I'm not super bullish because of it just alone and saying going into it is because historically a lot of the moves have come after that period. So people are kind of banking on making a lot of money. And the other thing too is what's very concerning to me is that if you go online and you talk to people, they're like, oh, well, just buy it now and close your eyes and come back at the halving and you'll be a millionaire. And I had trades like that in my early career and every one of them I lost. It was like, as soon as you think it's a done deal and it's a no brainer, you're losing. You're going to lose money on that. So I still think longer term, absolutely, it drives price higher. I'm just skeptical that it's going to overpower fear and greed, and in this case, fear. Bullish on Bitcoin, the Fed starts printing nonstop again. I don't know if that would be a positive. I think longer term positive for stocks, but I do worry that if the Fed comes to that where they're having to print unlimited amounts of money, the economy is probably in a Great Depression, which then would be negative for stocks. But I would say at least for Bitcoin, any sort of printing of money, the reason for Bitcoin stands out even more.
The S&P 500 and the Nasdaq touched 3-week highs on Tuesday, October 10th, as dovish comments from U.S. Federal Reserve officials pushed Treasury yields lower, while investors kept a close eye on the latest developments amid escalating tensions in the Middle East. The U.S. economy has been so strong that it has withstood the blistering path of rate hikes. In 2023, with short rates near their peak, long-term interest rates have continued to move sharply higher. Is this a sign of stress that finally delivers the long-feared recession? In the interview, Soloway emphasized that various signals suggest people are facing financial difficulties, and if this trend persists, it could lead to a more widespread perception of a recession within the U.S. population. Now, let's shift our focus to a few clips from the interview.
Right now, if yields pull back, the market actually wants that. And so we could get a short-term rally in the S&P and in the NASDAQ, but ultimately at some point, if we slip into recession, the economy really takes a hit, earnings are going to take a hit, and the stocks are going to really take a tumble as well. If you go back to really 2009, every time the economy has even tripped, not even stumbled or fallen, but just tripped, the Federal Reserve has come out gangbusters with liquidity into the system. And that's always been okay because inflation has been essentially below 2%. Well, we're at a point now where inflation is elevated. We're seeing strikes all over the country, healthcare workers, UAW workers, all these workers striking. They're getting higher wages. That is also inflationary. So again, it's going to be one of these scenarios where, like I've said, and we've had this discussion for 6+ months, inflation is likely going to stay at 3% or above for the foreseeable future, which is going to make the Fed's job for cutting when they come to rescue the markets almost impossible. Can they cut? Yes, maybe once, maybe twice, throw a mercy cut out there, but they can't really take us back down to jerk us out of this recession. And I think that's the big issue here, is why it could last a lot longer. If you don't have the Fed intervening like they usually do, which is a gangbusters intervention, then recession may be in a store for a longer period than usual. There's so many of these underlying signals, even with the consumer still willing to spend and run up debt, but there's so many of these underlying signals that are telling us that people are really starting to struggle. In fact, I would argue that a good chunk of the population in the US already thinks or feels that they're in a recession. It's just the people that haven't had investments. If you've been in the stock market since last October, you're feeling pretty good. And I think that's kept consumer spending up. We've now seen a top out in that phase of the markets, and we're now starting to curl over. And if that continues, you'll see the recession feeling hit the whole majority of the US.
Bitcoin is currently 60% below its all-time high, following a similar pattern with past halvings. 200 days before the 2020 halving, Bitcoin was 60% below its all-time high. Likewise, 200 days before the 2016 halving, Bitcoin was 65% below its all-time high. Bitcoin has been one of the best performing assets this year as several macroeconomic trends grow more alarming, from mounting U.S. national debt to rampant inflation across the world. This wraps up our conversation today. Feel free to share your thoughts in the comments section below. If you found this information valuable, please give it a thumbs up and consider subscribing to our channel to stay informed with the latest news and videos. Thanks for joining us.